Hello everybody, welcome back to my channel, Trading Secrets. This channel is for entertainment purposes only, and please do your own due diligence. And for those of you who do not know, my name is Ali. I have over 20 years experience teaching accounting, economics, business and law. And through this channel, I'm going to try and bring you some stock analysis as well as a short 5-minute trading lesson at the end. So please stay tuned. Okay, so if we look back at the previous day of trading, I think we can see that there were some small green shoots of recovery, a little bit of potential going forward. However, I think the correction may not necessarily be over, so we need to still tread very carefully in terms of our investments. However, if we look at a recap on some of the investments that I looked at yesterday, American Battery Metals, that made a good recovery yesterday, closing up just in excess of 9% at $2.80. Another one we looked at yesterday, which was ticker symbol TRCH, Torch. This one is one that again should be put on your radar and watch list, as it's got some tremendous potential going forward. This also closed just over 1.6% up, closing at $2.54, ticker symbol TRCH. And we also looked at Lucong Technology, which at one point was doing very well. You know, it was up well in excess of $1.80, at more than 15% up. However, there was a sell-off and it did close down at $1.53. However, this does represent another buying opportunity for those people who have not invested in ticker symbol LKCO. As going forward, this is a high risk stock with potential high reward. So it's a good opportunity right now to enter this play. So it's at $1.53. So have a look at this one. Please refer back to my previous video where I did a detailed due diligence stock analysis on this stock, and going forward it's got tremendous potential. So any strike price around $1.50 would certainly be a good entry point into ticker symbol LKCO. Okay, so let's start with today's stock analysis. Okay, so we're going to look at the good and the bad side of the NIO's reports that were released yesterday, which were the full year 2020 financial results and also the fourth quarter results, but bear in mind these are unaudited reports. So let's have a look at some of the key headlines. So we start here. We can see that deliveries in the fourth quarter 2020 were 17,353, and deliveries in the similar fourth quarter 2019 were 8,224. So this is clearly an increase well in excess of 100%, which is positive news. So let's see what else we can see in this report. Okay, so we're going to jump now to the financial highlights for the full year 2020, and we're just going to look at the three key headlines: vehicle sales, vehicle margin and total revenue. So the vehicle sales for the full year 2020 represent an increase in 106% from the previous year. So tremendous growth there. Vehicle margin, it was 12.7% for the year 2020, comparing that with a negative 9.9% for the previous year. So again, the vehicle margin is going in the right direction. So what this means is the return they are getting on each vehicle now is a positive 12.7%, whereas in the previous year it was a negative 9.9%. So certainly moving forward nicely for potential profit in the long term. So total revenues were $2,491.6 million for the full year 2020, and this is also an increase in 107.8% from the previous year. So absolutely tremendous growth in terms of revenue there. We can see that sales are going to continue growing, so this is a positive sign. Let's see what else we can see. Okay, so we're going to now have a look at the recent developments in terms of deliveries for January and February 2021. So deliveries of the ES8, ES6 and the EC6 were 7,225 vehicles in January 2021 and 5,578 vehicles in February 2021. So this represents a growth of 352% and 689% year-on-year growth. So again, tremendous cumulative growth there. The company is certainly moving in the right direction If this continues, we can see exponential growth, especially with what we have already know is their European expansion confirmed for Norway. So good news going forward there. So let's now look at the projected business outlook for the business going forward for 2021 in terms of the first quarter. So what does NIO expect? So NIO expects deliveries to be between 20,000 and 20,500 vehicles, and this is going to be an increase of approximately 421 to 434%. So again, tremendous growth there going forward into 2021. So certainly moving in the right direction. Let's see what we can see for revenue. So in terms of revenue, again, this is also expecting to increase, and the company are saying that they expect a revenue to go up by 438.1% to 450.8% in the same quarter 2020, comparing that with 2021. So that's going to be a good increase of approximately 11.2% and at 13.8% from the fourth quarter of 2020. So certainly moving forward in the right direction. This is obviously a projection. It is subject to change. It is subject to market conditions. Okay, so let's now look at what else we can find from these results. Okay, so on the face of it, these results look very, very good. They paint a very rosy picture going forward in terms of growth of deliveries, growth in revenue, and a positive future outlook. So what are the problems? So the first problem that we can identify here is by looking at a headline from the Financial Times, and we can see here the Chinese electric car maker NIO warns of a hit from the global chip shortage. So certainly this is going to be a problem. So let's just delve a little bit deeper into this, and we can see here that NIO is expected to be the main leading challenger to Tesla, so we can all agree with that. But the main problem it is going to have is that battery and chip supply constraints are going to limit production. So going forward, this is going to be an issue not only for NIO, but for many of the EV car makers. So obviously the other issue that we have is there's going to be much more fierce competition, not only domestically in China but worldwide. We are aware that many other companies are going into electric vehicle sales. So we've seen that with Lucid, we've seen that with Jaguar also confirming electric car sales. Ford are going into more electric car sales. So, and Apple also developed a project for that. So there's going to be a huge momentum going forward. So this will have a little bit of a negative impact on NIO as well. So what was the other problem? Okay, so the other issue from the negative side of NIO's results, we can see here from Yahoo Finance dated March the 1st, 2021. So although delivery numbers were good, although revenue numbers were good, what we can also see here from a negative point of view is China's NIO posts bigger than expected loss, slowing EV sales growth in the first quarter. So that's something that has not led to the significant spike in the share price that we would have expected. The future is not as bright as we expect in terms of everything go running smoothly. As we know in business, there are always going to be problems. These problems have to be overcome, and the business has to kind of restructure itself in terms of its outlook and its plans. So what do we expect going forward with NIO? Okay, so going forward, what's the conclusion that we can find as investors of NIO? So my personal opinion, going forward, NIO is still a good buy for investors. In terms of a strike price for NIO, it will certainly always be a good buy at anything below $50. So going forward in the medium term and the long term, I still expect NIO to hit close to $100 by the end of 2021, and going forward 2025, more over the long term, I expect NIO to be at least a $400 or $500 stock. So going forward, tremendous potential. In the short term, there's going to be a few issues in terms of capturing the extra markets, making sure that deliveries are maintained, and obviously sourcing the lithium and the battery technology. So those are the short-term issues. Once they are dealt with, the future certainly is still going to be bright because NIO is well ahead. The battery technology they have is a key USP, unique selling point of their business, and certainly the future is certainly bright in my opinion. Okay, so strike price for NIO again, anything below $50, but this is a stock that you need to hold and for the long term and certainly for the medium term. Okay, it's now time for lesson of the day. The lesson of the day is today looking at the dangers of penny stocks. So the dangers of penny stocks, in terms of the potential, obviously we are aware that you can make some tremendous gains and a lot of penny stocks can become well-established companies. We've seen that, and we can also see that some penny stocks can turn into some really, really excellent businesses. But what are the dangers? So first of all, they can be hard to buy and sell. So that is because they are not very well traded in terms of volume. We can certainly see in the early days, certainly with stocks like HCMC, when it was not very well known. If anybody was going to try and buy this stock, it was very difficult to buy. It was also very difficult to sell, and lots of orders were pending for long periods of time. Similar thing happened with Galaxy in the early days as well. So these stocks can also be subject to scams. So unfortunately, one of the reasons for that is they are not traded on the Nasdaq. They are normally traded on platforms such as the OTC, and because of this, the regulation and the checks and the auditing is not as rigorous. So it is a little bit more risky from that point of view as well. So they're also based on low quality companies. So the majority of stock companies are not strong. They're not well established. Some of them might be new startups. And those of you who studied business will know that any new startups have probably a 70 or 80% chance of failure. So it's very, very difficult for businesses to succeed long term, and the vast majority do not succeed. So that's always a significant risk. And the fourth risk we can see here, they are very, very volatile, extremely volatile. You're not going to get that volatility with Walmart, you're not going to get that volatility with Microsoft, you're not going to get that volatility with some of the key established blue chip, very, very large stocks where the return is not, excellent compared to some of the penny stocks that we have seen, but the volatility is low and your money is much, much more safe. So penny stocks are going to be volatile, and this is something that can lead to lots of profit, but on the other hand, it also leads to a tremendous amount of loss. So we have to be very careful. It's always a good idea to completely cash out. It's always a good idea to have your targets and also have your stop losses. So I hope that helps. Thank you very much for watching. Please join me again.